All right, guys, I am bopping to the music here. And Mike, actually, there we go. I'm getting the music in the background here, Mike, but good afternoon, everybody. Mike, how do I turn the volume off from the, the live stream there? Don't want to hear myself speaking. There we go. That's better. Yeah. Thank you, thank you, thank you, thank you. Can everybody hear and see me okay? Happy Wednesday, everybody. Good sound and display. Thank you, Gene. We're good. Trying to fix the camera there a little bit. We're good. We're good. We're good. All right. CM said to tell you AI is in the house. Charlie was sitting right behind me here for the better part of the morning and just stepped off the desk here for a while. Um, Another really, really quiet day in the markets. For the most part, we saw, or we are seeing markets higher this morning. S&Ps are at pretty close to their highs of the day right now, up 23 points. Some of the semis, though, are kind of teetering a little bit. Now, we are seeing Google trading towards its high of the day, which is great. We had a nice bullish position on. We exited out. Nvidia also, we exited out. Wonderful, wonderful positions we had on. Um, things are kind of bubbling a little bit. And when I say bubbling, I don't mean bubbling like because we're expecting a big sell-off at all, but things are just kind of getting ready to burst out one way or the other, in my opinion here. We're seeing that with some stocks on the upside today, especially off of CRM, Salesforce earnings. So stocks related to Salesforce are really popping. But what's interesting here, Apple was up nicely. That is really pulling back. Amazon is now trading at all-time highs. So there's really opportunity all over the place. I will tell you, I was on the floor a good portion of the morning this morning. I am not right now. It's really, really quiet down there. In fact, before Charlie walked away, we were just talking about the range in the triple Qs today. I mean, like non-existent, volume non-existent. So what do we do in times like these, guys, when there's not as much trade? Well, we still trade, but we are very selective and we don't force a trade. The worst thing you could do is force a trade. So just because it's slower, okay, don't look outside of the box. Don't look outside of your norm as to what you might trade. That will get you into trouble. That will get you into trouble. We know when the opportunities are there, we jump on them. When they're not, we can't force it. The market's a lot smarter than we are. So we cannot force it. All right, everybody. I am almost ready to start with our quizzes today, and hopefully you're going to like what I have prepared here, and we will definitely give away a lot of swag today. So let's get this up on the board over here. Can everybody see what is up on the board now? All right. How well do you know your options? Now, I want to, oh, Mike, look what I just did. That's going to be off now. There we go.
You gotta switch it to the desktop view.
Hang on one second, guys. Yeah, it's a webcam only. Boy, there we go. Now you do. I am just like all over the place today. Is that better now, everybody? How well do you know your options? You just see me, Gene? Yeah, that's not what you want to do. I got a face for radio. So you don't want that. There we go. Okay. Let me just preface this. Okay. Let me just preface this that when we get into the option explanations, the quizzes, all that good stuff here, before we get to the wheel, you may only win once. I still want you to participate if you've won, okay? But we got to spread the wealth. We got to spread the love around, okay? All right. So it is quiz time, everybody. It is quiz time. You are back in school. This is not necessarily options 101. This is going to be a little bit more advanced. This is like an upper level course. today. Okay, it's probably like a 300 level course that we're going to go through today. No vest. You know what? My vest is right here, and I took it off. And in fact, this vest will be part of the swag today. I took it off because our office is so incredibly hot. Right now, I'm in our office in the Board of Trade right now. And even though it's like 12 degrees outside, it's got to be 104 degrees up in the office. So I had to take that off. But we will give that away as part of the swag. All right, guys. Number one, I put a position up on the board here in Netflix. And let me also state, okay, any positions that we are going through during the quiz today, these are not recommendations for these particular positions. We don't have them, okay? These are just examples for today's quiz, okay? These are just examples for today's quiz. Okay, first position, first question, first spread we're looking at, Netflix, okay? Stock price of 912. What you see on the screen here, as we talked about the other day, what kind of position is this, everybody? What kind of position is this? Hey, Alan, are you on here? Alan and John C., are you on here? Can you hear me? Because I'm looking in the... Okay, Alan, you are here. I see you asked in the room. I'm over there. Did I say that it was still okay to get into VRT? And the answer is yes. The answer is yes. John C. Okay, the NVIDIA exit signal. Okay, you're looking for a NVIDIA. Sorry, guys, that you are seeing my shoulder now as I'm trying to help John C. But you know what? We're all about customer service here, guys. John, I'm really trying to help you out. Just bear with me, everybody. Just bear with me. The remainder exit signal in NVIDIA, John, was sent last week on the 29th, and that was to sell our position out at $2.60. If you didn't sell it, it's a lot higher right now. Okay? NVIDIA is almost up at the short strike. Ding, 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 ding. Okay? So you missed it, and you made more money. How good is that? Okay. Okay. So this position, this is just a normal butterfly. This is a call butterfly position, guys. Look at the strikes. Okay. We've got $15 between the strikes. So it is symmetrical. We're in a 1/2/1 ratio. So this is a butterfly. It's not a broken wing butterfly. It's not iron. Remember, iron, any position with iron in there, okay, is a position where you've got a combination of both calls and puts. A regular butterfly or a regular condor, if it doesn't have iron in there, all the options are on one side of the ledger. Okay? All right. So first question, first correct answer. Charlie Moon in the house. Charlie Moon in the house. Somebody right at the top here, Charlie, said to me, let Charlie know. There he is. Let Charlie know AI is in the house. All right. What will the delta be at expiration if the stock is 921? What will the delta be at expiration if the stock is 921? First correct answer. Oh, we got Momo in the house too, Charlie. Paul wants to let you know. Let's go. Let's go. All right. Gilbert. And by the way, guys, that's probably the easiest question of the day, just so you know. So maybe we did start with options 101, but we're going to get up to the 300 level. Yes, 100. Okay, why would it be 100? Well, the 920 call will be in the money at expiration. The other two options, the 935 and 950, they're out of the money. They're in the garbage, zero deltas. So the delta will be 100. Okay, next question on this position. If the stock is 923.89, 923.89 at expiration, what will the value of this position be? What will the value be? Charlie, what is your next target on Crocs? We Okay, we took half off, so thank you. And how about APPN? Okay, we've got a few answers here. Keep the answers coming in. Thank you. Don, I see what your answer is, and that's not the question that I asked. I don't want to be confusing to people. I didn't say what the P&L would be. I said, what would the value of the position be? Okay, and the value is $3.89. Why? Because the only option that has any value at expiration there is the 920 call. Okay, and it would be worth $3.89. The other ones are worthless. Okay, so Don, I know what you were thinking there, but I did ask for the value of the spread, not the P&L. Okay, guys, you guys have all graduated from options 101. We're moving on. Okay, now, as Robert DB would say, this could be like a broken wing, buzzard, condor, eagle, something. All right, what this is here, this is a short broken wing put butterfly. Okay. It's a butterfly because it's 1 to 2 to 1, but it's not just a regular butterfly because you'll see here that the strikes are not symmetrical, right? Unlike in the Netflix where we saw symmetrical strikes, here, if I can get there we go. Here we have a $3 wide spread here, but we've got a $7 wide spread here. So that's what makes this a broken wing butterfly. Now it's still a butterfly because it is a 1 to 2 to 1 ratio. Remember, all butterflies, whether they're symmetrical, broken wing, whatever, have a 1 to 2 to 1 ratio. Okay? If it was a 1 to 3 to 2 or something else, okay, it would be a ratio. Okay, it would not be a butterfly. So, okay, so we're putting this position on. Right now, the stock is 154, and we're going to put this on for a $1 credit. Okay, for a $1 credit. First question, what is the P&L of the position if the stock is 147 at expiration? Okay, now, remember what Don did in that first one. Don't get confused with value and P&L, guys. This one I am asking specifically, what is the P&L if the stock is 147 at expiration? Okay, any other answers here? Okay, we got a bunch of answers here. Keep them coming here, guys. Think about it. Use pen and paper. Use pen and paper. The old-fashioned way. In fact, let me show you guys something. Some new swag that we're giving away. I don't know if you can see it through the camera here. This really, really nice leather-bound notebook with our Prosper logo embossed. If you get this, you can use this to figure out your positions, your P&Ls. Okay, I'm going to give this one more minute here, guys. Those of you that have answered, you are not allowed another answer, but I will tell you right now, there is not a correct answer up on the board. I told you we were going up to 300 level class here. There is not a correct answer on the board. If we are at 147, what will the P&L of this position be? Hey, Jay-Z. Bingo. Bingo, we got a winner. Jay-Z. Is that like Jayz? Are you with Beyonce right now? Because if you are, I want to get the camera to you. I'm going to hand the camera over to you. Okay, why is it $4, guys? Why is it $4? Well, remember, we collected $1 to begin with. Okay, we collected $1 to begin with. If the stock is 147 at expiration, the only option that's going to have any value is our long 150 put. Our long 150 put is going to be worth $3, right? So if we have our put that's worth 3, we have the $1 we collected up front, that gets us to $4. $4, $4, $4. Does everybody understand that? Exactly, Robert. The aluminum buzzard. Does everybody understand $4? Okay, before we get on to the next question, Groucho's got to be here, right? Here we go, guys. Here we go. Wheel of the day, word of the day for the wheel, value. Value. That is what we trade for, guys. We look for value. We want to buy things undervalued. We want to sell things overvalued. So we need to know the true value of options. Good hardware store, by the way. All right, guys, let's get those in. Let's get those entries in here. We'll get back to the quiz here in a minute. Groucho looks like he had a couple too many whiskeys in this picture here. I think all those Marx brothers probably were tipping it a little bit. All right, let's get back to the quiz here. We'll come back to Groucho in a little bit. Okay, guys. Next question. Same position. Same position. Next question. If the stock is 143 at expiration, what is the P&L? If it's 143, get out your pens and paper, guys. Don't be embarrassed. Don't be embarrassed. Old school. That's how you're going to learn this stuff. 143 at expiration. What will the value be? Let's see them come in. Okay, we got lots of different answers coming in. I love it. That means we're going to learn. That means we are going to learn. Let's go. Okay, we do have some correct answers. The first correct answer was Derek. The value of the position will be bupkis, 0, goose egg, nada. Okay, again, I'm not going to put up a fancy risk P&L chart for you. I'm going to do this the old-fashioned way for you. That is how you learn, guys. At expiration, if the stock is 143, what's the 150 put going to be worth? Lucky 7, right? Craps, lucky 7. At expiration, stock at 143. What is the 147 put going to be worth? That one I got to get out my abacus for. Let's see, 147 minus 143. Oh, it's worth $4. Okay. But remember, we're short 2 of those. We're short 2 of those. So it's 7 minus 4 minus 4. And then the last put, the 140 put, is worthless. So that is -1. That is -1. However, remember, we collected $1 to do this. So the value of the position is -1. The P&L is Zippo. That is our break even on the position. Nice job, Derek. Hopefully everybody follows along there. Okay, last one on the aluminum buzzard here. What is the maximum potential loss? What is the maximum potential loss on this position? Whether the stock is 120 or 96 or 43 or 0, what is the maximum potential loss? Pens and paper, guys. Pens and paper. Fact. And I do have my trading code here. Guys, back to my humble beginnings. My trading code is right here in one of my pockets on my trading coat. I still have, from the first day I was ever on the trading floor, way, way back before a lot of you were even born, my little notepad. No, this is not Jeffrey Epstein's list. My little notepad with all of the notes that I would take that my mentor would drill into me on a daily basis. In fact, from one of the first days, I wrote down volatility, the extent to which stock moves versus one that sits still. Boy, was I young and deer in the headlights. Okay, back to this. I did see a correct answer way, way back here. The answer is a $3 loss. Let's see who put up 3. Okay. Besides Bear and ZW, who got it? Don Bell, Don B. You are correct. Now, how do we get to a $3 loss, guys? Okay. If we get to 140, which is the bottom strike, or anywhere lower, doesn't matter. Okay. If we get to 140, our long put's going to be worth 10. Our short puts are going to be worth 7 each. Remember, there's 2 of those. The 140 put is worthless. So we've got a value of -$4. If we add back the $1 credit, $3. Nice job, Don. Okay, Let me put this up here, guys, again, before we go into the next one. I'm not sure we're going to finish the next one, but we will get a couple more questions here. Last chance coming around the bend for Groucho and the wheel today. That was for Jeff. Jeff would like that. Jeff would like that. Nicely done. Okay, value, value, value. We need to find value when we trade. Final call here. Final call for the wheel, guys. Okay. Last set of questions here. What I have on the board here is just the buy of a simple call. Simple call. Lululemon, the December 350 call. Okay. We're going to use $14.20. Okay, $14.20 as the current price. If the implied volatility drops 6 points, what will the value? See, there's the buzzword. What will the value of this option be if the implied volatility drops 6 points? I don't know. I better check it out. I better figure it out for myself. I will accept the closest whole number. It does not need to be an exact decimal. Does not need to be an exact decimal. Okay, guys. Told you we were getting to upper level 300s. You got to know how to calculate what happens if implied volatility changes. Is there anybody that here, and please be honest, don't be embarrassed, if you don't know how to calculate this, please let me know. We're going to go through it anyway, but please let me know. I will give you guys a hint right now. So far, the answers coming through are nowhere close. How about that? I don't know. Kenny, I may give you some swag just for being, Kenny, oh, okay, great. Here come all the I don't knows. You know what? I like your answers the best. We're going to figure that out. While you're figuring this out, what Greek, what component out there, okay, helps us measure how much the value of an option changes as volatility changes? Delta tells us how much the value of an option changes when the stock moves a buck. What tells us how much the value of an option changes when volatility moves? What is that Greek? Hey, what do we have over there? Jackets? What is that Greek, guys? Nope, not gamma. Tom's got it. Gilbert's got it. Pat's got it. This is an easy one to remember. Vega volatility, V and V. So what we need to do is look at the Vega for that particular option. Okay? This Vega, which I just pointed out here, is, and I'm rounding off, 28 cents. That means for every 1 point that your implied volatility moves, the value of that option is going to change by 28 cents. So if vol went up 1 point, the value of the option would go up 28 cents. If vol went down 1 point, the value of the option would go down 28 cents. So my question to everybody was, if vol drops by 6 points, look at how we are going to do. Old-fashioned math. The value of this option is going to drop by approximately $1.68. $14.20. minus 168 gets us to $12.52. If I'm not mistaken, and I said that I was going to take a rounding, it's going to be fine. I believe Tom Chuang was the first one. He came in with 1250, definitely acceptable. Tom, nicely done. Okay, now you all have the secret sauce, guys. You all have the secret to how to figure out the next question. Hopefully this is your final exam. And if you have a nice professor, he's going to let you slide. But what will be the value of this call if the implied volatility gains 11 points? Google on its high of the day here, by the way, guys. NVIDIA off a little bit from its high. Would certainly like VRT to rebound a little bit. Okay, what will be the value if yeah, SPY, a little bit of a sell-off there, huh? Okay, guys, what will it be? BA? As in Boeing? Okie dokie, we got orders coming in. We got answers coming in. And the first correct answer for someone that was not correct earlier that already won the swag would be Bill Glushko. Bill, 1728. 1728, nicely done. How do we get to that? Remember, 28 cents times 11 points, okay, is 308. 1420 plus 308. 1708. Nicely done, Bill. All right, everybody. That's going to wrap us up here. Let's get over to the wheel here. Let's get over to our Wheel of Fortune. Oh my God, I can't even read this wheel. There are so many people on it today. Love that. Love that. You know what? Charlie Moon, come on in here. I want you to spin the wheel today. We got a guest appearance. Here's the mouse, man. Give it a spin. My hands are here, so you know it's not me. So if it's fixed for Robert D, that's all on Charlie today. There we go, guys. Who's got the wheel? Who is it going to be? Mike Cook, Todd Lindbergh. Mike Cook.
Oh my God.
Mike Cook by literally a nanosecond. Mike Cook, are you in the house? You got to be in the house to win. Mike Cook, are you in the house? Mike Cook, are you in the house? Still looking for Mike Cook. Mike Cook, we may have to spin again, guys. Don't go away. Just because, like the other night, the Bulls won in a blowout and we left early. Don't leave early. All right, Mike, you got 5 seconds. Oh, there he is. He just made it. Mike Cook is here. Wonderful. Wonderful, wonderful, wonderful. Okay, congrats to all the swag winners today, the quiz winners and the wheel winner. Make sure. Send me an email, ASAP, ASAP. Right there, prosperswag at prospertrading.com. Give me your mailing address. Give me your size. We will get you out some swag, including that new leather-bound book so you guys can figure things out by hand and throw away that computer. All right, everybody. We will see you tomorrow. Have a great rest of the day. Appreciate all of you.